The situation with soy is interesting. There's a lot of attention on the price, yet the chain isn't get used that much. There isn't that much more growth. Let's have a look at some on-chain metrics. Let's try to figure out what's going on. Let's try to find out where the price might be headed from here. Now, soy is the 11th largest asset in all of crypto. It's got a market cap of almost 11 billion. So number 11 in market cap, but only number 9 in terms of total value locked in decentralized finance. But then when we look at the crypto casino, so the perpetual futures, the bets on the price, soy is at number 6. So it's only the 11th largest token, but it's at number 6 in terms of how many bets are open on the token. There's an open interest of $1.4 billion, and in the last 24 hours, it's also the 6th largest asset in terms of liquidations, 4.9 million. So relative to its size, there are a lot of people speculating on soy. And so it's not really a surprise that the prior videos on soy also outperformed the average video on this channel. The last video published 2 weeks ago got roughly double the number of views of what an average video gets. So lots of attention, lots of speculation, lots of leverage through the perpetual futures, yet we don't really see that much more growth on chain. Check this out. This is the total value locked of the soy chain measured in soy tokens. Since 1 year, we're just going sideways. Have a look at the app revenue. Again, initially some growth, but for a year we are going now sideways. Let's have a look at a few more data points. This all comes from soyscan.xyz, so directly from the blockchain. There's a lot of spikes in the data, but not necessarily growth. Here are a few more charts. Again, very similar, not necessarily long-term growth. The only thing that tends to go up is the maximum gas fee. In other words, it becomes more expensive to use soy. There was a massive spike in active accounts at the end of May of 2024. That then came crashing back down, and now it's higher than, say, 2 years ago. But again, in the last 12 months, not necessarily any growth. So it seems like the numbers are somewhat aligned. There is some usage of soy, but most of the price action is not adoption of the chain itself. It's just levered bets. It's the perpetual futures that drive the price action. Because on chain, we also only saw 250 million of trading volume in the last 24 hours. That's not necessarily a lot. When we compare this to Base, that's more than double. When we compare this to Solana, that's less than 1/10. The market cap of soy though is more than just 1/10 of Solana. Soy would have to go down another 30 to 40% to be in line with Solana's valuation. Now, how did all of that speculation start? Why are so many people interested in betting on the direction of the soy price? I believe it has to do with the somewhat intransparent tokenomics, so the supply of soy. Have a look at this chart. This is the number of circulating soy tokens over time. There's the community reserves, there's stake subsidies, and there's the community accounts. And then we got a big jump again in May of 2024, and the supply continues to grow. Now, not all of the supply that gets allocated to various stakeholders gets sold transparently. Sometimes there are over-the-counter deals or direct dealings of insiders versus the outside world that's not directly transparent on the chain. And so the price can get depressed even though we don't see clear selling yet. The market isn't always clearly betting on falling prices, so the funding rate fluctuates from positive to negative to positive. However, there's a strong correlation between open interest of soy and the soy spot price. In other words, when there's more and more bets on the price tends to go up. When leverage exits the market, the price tends to go down. Currently, on a historical level, we tend to have quite a lot of leverage in the soy price. In other words, the price might be short-term inflated. Because that's the whole idea of perpetual futures, right? We bet on the price short-term with leverage. The capital that's in the asset short-term will at some point, of course, exit again. And that will then also lead to a deleveraging of the price. All of that speculation, of course, also causes liquidation fees. This is always what the market makers are looking for. Now here's soy relative to Bitcoin, and we can see the leverage expanding and contracting quite nicely see this is a 200% rally. This is a 73% crash. And then subsequently another 450% rally. But again, open interest is historically high. So I wouldn't hold my breath for SUI to reach again the heights of the beginning of the year and make another 50 to 60% outperformance versus Bitcoin. I think the likelihood of a continued deflation of the price is rather high. Now, nobody has a crystal ball and the market manipulators can push the price in any direction. I'm just looking at what's happening on chain. There is not a lot of additional usage. At the same time, we do see how the price gets pushed up through the perpetual futures, and at some point leverage moves from one asset to the next. And currently it's with SUI. Now, in October of 2023, the market flipped. The market turned from bear to bull. The market saw inflows from traditional finance. And we can see this in this chart. This is the stablecoin market cap. So it shows how many dollars in the fiat system are deposited somewhere with a custodian, say with Tether or with Circle, and what equivalent has been minted as stablecoins on chain. And from May of 2022 to October of 2023, we actually saw a contraction of the market. So money was flowing out of crypto. People were turning back to TradFi. People were withdrawing their money. But that then changed in October of 2023. Since then, we see more people depositing than withdrawing from the crypto ecosystem. And surprise, surprise, this is of course also an impact on crypto prices. When money is flowing in, crypto prices tend to go up. And that is what we see with this chart at the bottom. This is the Bitcoin price. So when money comes into the market, Bitcoin goes up, and that is with a leverage effect. So Bitcoin appreciated by 260% since the beginning of October, while the stablecoin market cap went up by only 85%. Now still, there is a lot of volatility. What causes a price drop like this of 26% while there's actually money flowing into the system? The answer is swapping activity. So it's not just people depositing their money into the system and then wait and invest for the long term. Most people in crypto trade actively. And whenever people move from stablecoins to risk on assets like Bitcoin or altcoins, the prices go up and vice versa. So there's money flowing in and out, and there is swapping activity, people getting risk on and risk off. Now we can use that data because we can have a look at how much of the entire cryptocurrency market cap is currently in stablecoins. When most people have swapped into stablecoins, the stablecoin dominance, so the percent of all of crypto that's in stablecoins, that's pretty high. When a lot of people have deployed their stablecoins, then the stablecoin dominance is low and the crypto prices are high. So check this out. This is the stablecoin dominance, and this is much more volatile than the stablecoin market cap. And at the peak, 19% of all of cryptocurrency's market cap was just stablecoins. So that's when people are very much risk off. And that's then also when the Bitcoin price tends to be low. As stablecoins get deployed into risk on assets again, the Bitcoin price tends to go up. Now in the last 1.5 years, we tended to trade in a range. So that's between 9% stablecoin dominance to 5% stablecoin dominance. And if this is now coming back down again, as we have seen in the last few days, then crypto prices will go up. Let's work with the assumption that we see the exact same development of people deploying their stablecoins again as we saw in November of 2024. So let's overlay this. If we take this time frame and we look at the Bitcoin price development during that time, then we can overlay this to the price today. And we're getting to a potential upside of somewhere between $130,000 to maybe even $150,000 per BTC. And so this is, I think, the most likely scenario. I think most people have this backwards. There are too many comparisons made with traditional finance and the crypto ecosystem, as in when the money supply is going up or when the Federal Reserve is lowering interest rates, that's when money is loose and that's when crypto prices should go up. But I don't think the link is that strong. I think the link is much stronger for how much money is currently on the sidelines already within crypto. We know that the crypto ecosystem as a whole is expanding, right? The stablecoin market cap is going up, and that obviously matters. And at the same time, we also see that a lot of that stablecoin money is not yet deployed, but is ready to get deployed. And so if we work with that scenario, if we say, okay, a lot of that money might get deployed if times get a bit brighter, should we just go now and buy all kinds of random altcoins? I am not so sure. Because here's the counter story to all of this. The Bitcoin dominance continues to go up. So as a fraction of all of crypto, Bitcoin becomes more and more important. Bitcoin tends to outperform most other assets. And we only saw an altcoin rally when Bitcoin dominance was close to 70%. So when only 30% of the cryptocurrency market cap was in the alts, that's when the alts were cheap enough to subsequently make a rally. And we are not yet there. So just building a portfolio of altcoins is probably not going to cut it just yet. Here is what I'm doing instead. I'm looking at what are other influencers and other heavyweights buying. So we track various important wallets and we see, for example, how the Pepecoin team or the Base AI team is accumulating the KEK token. And that's happening at a very small market cap, only 3.2 million. We got notifications for all of those purchases, and though the price just continues rising. We still need an edge in this market. We can't just buy any random altcoin, but the market is expanding. It does make sense to take some risk on bets now. Now, since crypto cannot create money out of thin air, it's still a player versus player game. And so if you follow the insiders, if you follow the people that traded well in the past, we have an edge. For example, over here, we've got 33 wallets that we track by the Crypto Banter group. They've got 1.16 million subscribers on YouTube. Or we are tracking 12 wallets by Alex Becker. He's got 1.6 million subscribers. Or check this out, Brian Young. We have 5 of his wallets and he's got 2 million subscribers. So there are two components to this. First, those influencers tend to get information relatively fast. They tend to beat the market. But secondly, they might also have an impact on the market. So when somebody with 2 million subscribers talks about a small cap cryptocurrency, of course, some of the followers will buy the token, which then pushes up the price. And so with all of those wallets that we are tracking, we get various signals. Who's buying and selling what at what point in time. And while it's nice that the market is expanding, it's still a winner takes most market. So returns are very much concentrated in just a few assets. There are mostly losers in this market and a few winners that take it all. Just have a look at the top 100 cryptocurrencies in the last year, right? There are some tokens that perform phenomenally and a lot of them that are just losing. So just diversifying does make sense. If you just build a portfolio of many different altcoins and we don't trade actively, then we are underperforming Bitcoin because Bitcoin dominance continues to rise. Instead, what we need to do is we need to find ways to buy things such as virtual very early. And this is where we come back to Brian Young. We got a signal of Brian Young buying into the virtual token, and that was at 7 cents. So that was on the 21st of March of last year. Our community got excited and bought in. And of course, the rest is history, right? Now we are at $1.75. And so this is my strategy in this market. The market is expanding, people are making profit, but still returns are concentrated in a few winners. And we have to have a way to identify those winners. And we don't have to be the best at this, right? We just need to know who are the best and we have to find their wallets. And of course, this is not public information. And so we have to do on-chain analytics to find the wallets. And so of course there is the influencer trade channel with all of those signals, but there's also a tutorial course on how to find different wallets. So we use related trades, we use official NFT transactions, we try to figure out ways through deposit addresses on centralized exchanges, etc. to get new wallets that we then actively track with this automated bot in the channel. And since the community is learning how to find new wallets, we also have a dedicated wallet research channel. So this is then where our 500 members look for new signs for influencer wallets. And once the moderators have confirmed those wallets, they get added to our tracking. For example, here, right, we've got Crypto Gains that suddenly out of nowhere was talking about the Champ token. And of course, we knew about this because we saw the purchase alerts before in our tracking. And so by tracking the insider wallets, we become insiders as well. Not of course in the legal sense, because all the data on the blockchain is 100% official and transparent, but we do have an edge over other market participants because most people don't go through all of that effort. And so it's not necessarily just about buying one asset and finding the winner and holding it long term like virtual. It's also about shorter term trades. And so the community, of course, shares the winning trades as well over here. Just have a look. If you add some leverage to the game, you can make quite nice gains in a short period of time as well. So feel free to check it out. It's currently $125 per month. If your crypto portfolio is not just $500, but rather 5,000, then it's probably going to be worth it for you, especially in this current market. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.